Okay, good afternoon, everyone. Apologies for the delay, waiting for everyone to join via Zoom and Facebook Live. Welcome to YCM's 77th CEO series and 3rd of 2020. Also, Ramadan Mubarak to our Muslim friends. My name is Chetan. I'm the YCM chairman for this year. So today we have the pleasure of hosting Zac Liew, co-founder and CEO of FinTech company Curlec. We'll be speaking more on how COVID-19 has helped accelerate the migration to online payments and the utilization of the subscription-based models. So today we'll have an extended Q&A session compared to our previous two sessions. That will be combined with a brief sharing segment by Zac. The Q&A session will be moderated by my colleague Firdaus. So as usual, we have a few points that we'd like to raise beforehand. So I think in particular, point number 5, during the Q&A session, if everyone could kindly, especially on Zoom, if everyone could kindly engage gallery view and hide the non-video participants during the Q&A segment, that will be great. I think it will allow you to have a more engaging and meaningful Q&A session. So I'll speak briefly about ourselves, YCM, Zac and Curlec, and today's session. So YCM is fundamentally a youth networking organization. We are the largest and by extension, the leading youth networking organization in Malaysia with more than 13,500 members. We run a diverse range of programs aimed at catering to different sets of or the different needs of among the young working professionals of Malaysia. So we have our essentials sharing session, essential skills-based workshops, focusing on developing hard and soft skills, mentors, which is a mentorship program to connect senior leaders in industry with young professionals to help accelerate career or personal development, and career mixers, which is where we utilize our vast and varied member pool to help deliver targeted and streamlined job matching. So, well, today we're here for the CEO series session. So the CEO series program is where we engage C-suite executives to speak on the pressing issues of the day and share a bit about their journey to the top. This provides a platform to connect leaders with young professionals, encourage sharing of knowledge and perspectives. So the key leaders we've hosted this year include Kai Lin, who's a co-founder and CFO of FundNow, which is an investment platform, and also Dato Chevy Bay, the founder and CEO of BookDoc, who has been heavily involved in helping the MOH and the public health services combat COVID-19. So today we're here for Curlec and Zac Liew, so we have the pleasure of hosting them. So Curlec is a fintech company focusing on serving the underserved companies, i.e. the SMEs, in Malaysia by providing access to banking services that traditionally have been reserved for larger corporations. The main area of focus of the company's direct debit to enable SMEs to enhance their cash flow management capabilities, particularly important in the COVID and post-COVID environment. I'll let Zac elucidate further during the Q&A session. Zac, who funnily enough was my senior in school, had a brief stint as an analyst for Barclays Bank in London and worked as a product manager for a couple of tech companies prior to setting up Curlec. So in recognition of his achievements and the work he's done thus far, he was recently conferred the Forbes Asia 30 under 30 recognition for 2020. So massive congratulations to Zac on a truly great personal achievement. So what we're going to talk about today, we'll be speaking further about how COVID has accelerated the migration to online payments and making use of the subscription-based models available. So clearly all companies are facing cash flow measures of to a certain degree. The Department of Statistics Malaysia has today released, or last night released, a series of figures to illustrate this. 67.8% of companies surveyed received zero income during the MCO period. So from mid-March to the period prior to the CMCO. So this has resulted in 68.9% of companies utilizing their retained earnings to finance operating costs, 19.8% of companies taking on additional debt, and 11.3% using equity. The problem companies face are that despite generating no income, they still have to cover their fixed costs. So this includes things like rental, interest on loans, salaries as well. So obviously there's some scope to reduce costs, as seen by the increase in the unemployment rate for March to from 3.2% in February to 3.9% at the end of March. So part of the solution post MCO would be building up cash reserves to help enhance or recover financial stability. And how can this be achieved? Well, I'll let Zac answer those questions for you. So I think I'll hand over the floor to Zac and Firdaus now to take you through the introductions and the Q&A session. Thank you. Sorry, Zac, can you hear us?
Hi. Okay. Firdaus here. So we'll start off by handing the floor to Zac to tell us a little bit about Curlec and give us an introduction.
Hey guys, can you hear me?
Yep.
I'm gonna take that as a yes. Hi everyone, thanks for joining. And Chad, thank you for the intro. I'm not gonna sort of intro myself anymore because Chad nailed it, to be honest. So I'll give a little bit more context about Curlec, you know, a brief introduction, and then I think we sort of just dive straight into questions. So I am the co-founder and CEO of Curlec. We are a fintech company that makes it really easy for businesses to collect recurring payments and take control of their cash flow. How we do this is that we build technology on top of bank-to-bank payment mechanisms. In our case, we use direct debit, albeit although we are starting to venture out into other spaces. So that's a pretty brief introduction about us. There are sort of some pretty exciting things that I'll probably share throughout this 1 hour session about sort of our plans for the future and sort of how we're looking to diversify out of payments. And like I said, you know, sort of the subject title of this webinar, into the subscription economy and empowering businesses to access it, particularly after sort of what has happened after this MCO period. I think you're on mute, Firdaus.
All right, cool. So I guess we can get straight into it. We can start out with our question and answer.
Sure.
We've got a couple of questions that our attendees, our participants have sent in. And we've sort of categorized and grouped them together, and maybe we can just start with that. So I guess like for the first question, I think that's on everyone's mind is that we've been in this COVID MCO for the past 7 weeks. And I guess the first question is, how has that impacted Curlec so far?
Yeah, so I think that is interesting on many levels, and sort of Curlec on many levels has been obviously impacted in a number of different ways. I mean, I don't think we can shy away from the fact that regardless of what industry you're in, regardless of what size of company you're in, you are going to be impacted somehow by COVID-19. But I think, you know, let me start off by saying, you know, we are somewhat fortunate in the sense that we have a pretty diversified range of clients. Take that brick and mortar or more online based businesses, or sort of you're sort of segmenting by size. Then we've got small SMEs and corporate. So obviously, so if we start off with the small, with the sizes, as we've got exposure to SME businesses, obviously been impacted. I think particularly in the brick and mortar space, we serve a lot of businesses such as gyms and education centers and stuff like that, that due to the MCO and sort of moving forward with social distancing rules, likely to be impacted. And we work on a transaction-based model. So if those guys aren't transacting, then we obviously get no revenue from those guys. But on the other hand, what we're seeing with some of our online businesses is actually a big uptake. People, as an example, we work with a bunch of the robo-advisors here. And there's been a bit of a surge in sort of, savings and investment, digital investment and stuff like that. Actually, I don't know why Ken's on here. I know he was previously part of YCM, but, Stashaway's one of our big customers. So, we've seen a big uptick there. Also, some interesting things in the middle. We serve B2C as well as B2B companies. And particularly in the B2B space, we're seeing quite a lot of interesting findings, just due to the very nature of the fact that over MCO, you can't see anyone, you can't be in the office, etc. We have signed up a lot of B2B companies. I'll give you an example. We work with a lot of outsourced accountants and professional services firms, company secretaries and all that sort of thing, where they have signed up to Curlec, but adoption has been relatively low. You still get clients say, hey, I want to pay you by check, or hey, I want to bank it in, or hey, in some cases even cash. And what we're seeing with this guy is just purely out of necessity. You can't, as an example for a check, you can't get anyone to sign off on that check during the MCO period. You can't get your director to sign off on it. So what do? You encourage to pay by digital payment. And this is very much what we see as a trend. Within certain industries now who have had the luxury of being able to operate. But I think also that the long-term view, we're going to sort of see businesses, big or small, go from sort of digital as a nice-to-have kind of thing to digital as a necessity. A very much digital-only approach moving forward. Okay.
So that's very interesting what you said about how technically Curlec isn't exactly impacted by COVID, but because your customers are, and therefore it's an indirect impact. Okay, so also interesting that you mentioned about how some people are, or rather customers, some of them are not really in the digital payment space yet. So just to speak a little bit about that, how do you see online payments evolving from this, or rather, how do we encourage people to be more on board with digital payments? I know that COVID is also a catalyst, but how do we change that sort of mindset?
Yeah, I think just one thing. Obviously we have been impacted, and sort of, as a team, we've had to go through a bit of a very quick learning process. Everyone's had to work from home and all that sort of stuff. So it has been a big learning curve for everyone involved. We're lucky in the sense that we're small, so we can move quite quickly. And whilst things have been okay so far, we still anticipate there may be some downside at some point. But I think to answer the question, how the shift to digital payments, and there are many layers to this question. I think one of which is, if you look at it pre-COVID-19, big push, globally, but it's sort of, we focus in on Malaysia, within Malaysia itself to go cashless. That was the big initiative by Bank Negara. They published a blueprint for us to get cashless, and obviously enacted policies in order for us to get there. For example, if you sort of look at credit card MDR rates, sort of the transaction fees that a merchant will pay, Bank Negara is just driving all of that down, making it much more affordable for businesses to transact cashless. And that was sort of stay pre-COVID-19. But again, sort of to my earlier example, it requires a push. I listened in on a podcast the other day, and said, either there are two ways of sort of enforcing change. Either, and you use an analogy as a lake as an analogy. Either you bring someone to a lake and they sort of eventually will drink the water, or you push them into the lake. And I think COVID-19 has been very much that push.
Yeah.
The push. There has been no other option to transact. And as such, you've got to move digital. And I think, there's all sorts of phrases coming out at the moment, this low touch economy, et cetera, et cetera. So I think, from a business perspective, you're going to have to move online in order to succeed. there's been a big surge in e-commerce, and obviously payments is just one bit of that jigsaw. And I think from a consumer perspective too, the ease of transacting, there was I think someone mentioned previously about digital banking and all that sort of stuff. That's going to become more prominent. Think about yourself with an MCO period. When was the last time you thought about going to a branch? When was the last time you thought about going to an ATM? I mean, I had some cash in my wallet at the beginning of MCO and I haven't touched it. So I think, it's just accelerated the inevitable, in my opinion. And I think, I mean, I assume everyone here is relatively young, so sort of isn't on the same page as me. But I think particularly in the older demographic and all that sort of stuff, more traditional type businesses, the push is really just there now. And I think it's a very much a digital only approach now moving forward.
All right. How do you see, I mean, so we've seen the push with COVID-19, and what about, just to touch a little bit, what about after COVID-19? Do you sort of see this trend continuing, or do you see us going back to a time where we're not doing digital anymore, or is this only a forward push?
I think it's only a forward push, but the caveat to that is that obviously a lot of businesses, particularly SME businesses, may not have the capacity or may not have the expertise to get there. So there's always going to be that offline approach. I give you an example. We work with a lot of gym clients, whether it's sort of boutique type gyms or larger big box chains. And yesterday we had a roundtable discussion with all those guys. And sort of, what is the strategy moving forward? What is the business model moving forward? Are you only going to just wait until MCO is over and just reopen and live as is normal? Or you're going to have, I've seen IG, in Instagram and all these sort of things, Zoom workouts, all that sort of stuff, purely online stuff. So what is the balance? And I think really it's a combination of both, a hybrid model, particularly for those of more offline brick and mortar type businesses where, particularly, you take a gym, right? You still want that offline experience, the community and all that sort of stuff. But that's right. But also, with social distancing and all that sort of stuff, you also want that online approach. And, so I think it's very much that, if we're using sort of retail spiel here, O2O experience. And I think, generally we're going to see that hybrid model go across a range of industries across the economy.
All right. Okay. So just a curious question, like, did you see, as Curlec, did you see an increase in customer base because of COVID, because COVID happened?
Yeah, we've definitely seen a surge in demand. It's a little bit of two ends to the stick here. There's been a surge in demand, but obviously, part of our value proposition is we're enabling businesses of any size, whether you are, particularly the SME segment, to access, what once was a previously inaccessible payment system. The banks wouldn't serve these guys. And I think, just the harsh reality of it, is that, when you have exposure to SMEs, the reality is some of these SMEs won't be operating. And I think, on the sort of very bad end of the scale, a lot of these businesses will have to shut down. So whilst there has been a surge of demand, we've also, to be perfectly honest, also seen pauses in subscriptions with us. So I think that's the short-term impact. I think the long-term impact really, for what it is we're trying to achieve, we're pretty bullish on what it is, whether that's online payments, recurring payments, and really businesses moving to subscription-based models, recurring revenue models. We really are quite bullish in the long term about it.
All right, that's good. So one more question on that is, like, how fast, with or without COVID, how fast has and is Curlec growing in Malaysia? And what is the current penetration rate?
Good question. So let me just provide a little bit of background about the company. We started off February 2018. And sort of within it's just over 2 and a bit years now, right? We have processed about ~250 million ringgit through the system. We're serving just over 300 businesses, whether SME businesses, but also serving sort of corporate MNC companies as well. In terms of sort of growth, I mean, year on year, sort of, when you start from a base of 0, actually, the numbers are actually very, very nice. But if I take it on a monthly basis, I think it gives a more accurate representation. So I think this year, including the last couple of months, obviously, sort of, we've gone through nearly 2 months, pretty much 2 months, right, of MCO.
7 weeks, yeah, almost 2 months.
Yeah, almost 2 months. Including the last 2 months, we're averaging around 20% growth month on month. Last, yeah, and I mean, again, I say this with a caveat, we do sort of, are always prepared that this may not be the case. Growth we did grow last month, revenue was up, so were transactions. But, we are always wary that, especially sort of with that exposure to particular businesses who may see declines in sort of demand and transaction volume, that we may see that too. But, generally speaking, 20% month on month is what we've been experiencing this year, albeit a little bit slower in the last couple of months.
All right. So this is one question from the floor. How is Curlec able to sustain the low transaction fees of 1% per transaction, capped at 10 ringgit, as compared to like your other competitors like iPay88, which charges 3.5%, or Stripe, which charges 3%?
Yeah. I mean, first off, that's very expensive. Those two you just quoted there. No, yeah. I mean, I think, again, it's sort of just understanding where we fit in the whole entire payment ecosystem. So with Stripe and iPay88 and just generally speaking, all those type payment gateways, the way in which they process payments tends to be via the card networks. What I mean by that is sort of the Visa and MasterCard networks. You process your card transaction, from a consumer's perspective, when you're doing an e-commerce transaction, you're filling in a 16-digit card number, checking out, blah, blah, blah. And when you go through those international card networks, tends to be more expensive. You're subject to sort of an international network. You've got interchange fees, MDR fees, bank fees, blah, 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 which makes it incredibly expensive. On top of that, with a payment gateway margin on top of that. In our case, we process all our payments through PayNet. So for all of you on the call, some of you may know PayNet, some of you may not. PayNet is sort of a Bank Negara subsidiary. They're a Bank Negara entity. The clearinghouse of Malaysia, the local banking network. PayNet stands for Payments Network. And they facilitate all interbank payment transactions in Malaysia. So I think PayNet is actually MEPS and MyClear merged. So when you do an ATM transaction, you'll see MEPS on the ATMs. They're also responsible for Do It Now, IBG, Instant Transfer, etc. And Direct Debit, as well as FPX, is one of their products. And like I said earlier, it's with Bank Negara trying to really push down, particularly domestic payments, the fees for those, because we process through that network, it becomes much, much more affordable for a business. And even though we charge a margin on top of that, we can keep prices low for businesses, purely because we process through that network.
So in that case, there's an advantage of being a local company then. I mean, utilizing the local facilities as well.
Yeah, I mean, I think there's pros and cons for both systems. We probably don't have enough time for me to bang on about sort of bank-to-bank payments versus card-based payments. But generally speaking, bank-to-bank, they're domestic, which means you can't do international payments is one. Which is but and generally speaking, also the failure rates are lower, and obviously the fees are lower. Obviously, with card payments, the reach is much broader, albeit with a higher cost. But in saying that, a lot of feedback we have had is that, hey, I can't process international card payments for I don't know, an expat coming to. Let me give you the gym example just now as well. An expat who wants to sign up to my service. So maybe a little bit of hot off the press. We have just rolled out international card payments. Just to bulk out, our product offering, because we do feel it's important to provide more payment options to businesses across the board.
Yeah. All right, cool. So I guess in that sense as well, I mean, we talked a little bit about strategy and all that kind of thing, and just with an interaction with your competitors, obviously you have one advantage, which is being local and being able to push prices down to be more affordable. Is there anything else in the game plan for Curlec to stay ahead of the game versus these competitors? Or maybe not so much international competitors, but like local competitors at least?
Local as well as international. I mean, I think when we built the company, it's we didn't build the company just to be a local company. We built the company to be a regional and international company. I think that's the first thing to note. I think you know, the way in which we look at it is that if you just focus in on payments, you know, which is how we started life off with, you know, direct debit was purely just an entry point for us. And if you just focus in on payments, you leave yourself at risk, because it becomes a price war a little bit. You know, you quoted me just now, Stripe and IP88 are charging 3.5%, Curlec charging 1%. But what is stopping another competitor, the Third House Pay, coming in and charging and charging 0.5%? You know, it becomes a price war. You know, and really for businesses, particularly SME level, they're very, very price sensitive. So I think for us, it's how do we go diversify beyond payments? And one of the things that we are doing, you know, and purely by nature of the fact that we serve a lot of businesses with subscription-based models, recurring revenue models, is the fact that we want, you know, right now we do the payments piece of subscriptions, but we want to produce a piece of software, a system that, you know, let's call it fattening out the product, you know, whereby, and it's a subscription management system where, you know, as an example, I want to start providing subscription services to my clients. You know, I need a system, otherwise I'll be using through Excel sheets and all that sort of stuff. So, you know, straight from sort of the onboarding process, what are my pricing packages? What is all the data analytics according to each customer? And subsequently sort of the billing cycles. You know, I have X amount of customers. I need to bill these guys on a certain day for a certain amount. I need to invoice these guys. Subsequently, I need to do the payments, which is really what we do, and subsequently reconcile this too. So I think, you know, the more and more we build out that product, and the more and more we diversify and really look down sort of what is our particular niche, and where we really see sort of market demand, and sort of where, you know, the economy, you know, the subscription economy is something we always chime on about. You know, I think once we diversify ourselves and make the product as sticky as possible, then we go beyond payments. You know, and in fact, you know, if we're doing some blue sky thinking here, you know, you could actually give payments away as free. You know, payment prices keep going down and down and down and down and down, whether that's by, you know, market pressures, you know, competition just pushing the price down, or like I said earlier, Bank Negara pushing the price down. So, you know, I think it's an important point for payment companies generally to think about, how do I just move away just from payments? Because when you leave yourself to payments, you see there is risk in the sense that you just go into a price war.
Yeah, and even with the price war, it doesn't really benefit anyone anyway, because at the end of the day, it's definitely going to be an issue for all these companies who are providing this service. Yeah, okay. So I mean, just on that point alone, on like when you're talking about Bank Negara and things like that, in your opinion, do you think that Malaysia is over-regulated or maybe under-regulated with relation to like, you know, companies who are in this digital payments industry?
Can't really see the participants, but I hope we don't have any regulators on here. I think, I mean, I think in Malaysia, particularly Bank Negara and the regulators here, we're very risk averse and relatively slow. There is good reason for that. You know, obviously financial services is something that's got to be, you know, tread with caution. You don't sort of want it to be a cowboy market, but at the same time, you don't want to stifle innovation. So, you know, I mean, you can talk from a Curlec perspective here, you know, that we still have to go certain processes, you know, purely due to Bank Negara stroke banking requirements, you know, that requires paper forms and stuff like that. You know, for an SME to onboard to, let's say, a payment product, still requires a bunch of paper forms. You know, why can't this be digital now? The MCO has completely proved the fact that, you know, people don't want to use paper, or you can't use paper. You know, you need to onboard digitally. You know, banks are now sort of providing loan application processes online. So, you know, we've got to start thinking that way. We've got to start moving that way. And I think, again, COVID-19 and MCO has really pushed it that direction. But, you know, I think Bank Negara has got to be quicker. You know, some of the digital banking stuff as well, you know, whilst the framework is decent, I mean, it's all right, but, you know, sort of when you compare it to other countries, you know, I take Europe as an example. The way in which the digital banking framework was designed there was such that, you know, you could get small fintech companies, say Curlec, I mean, albeit well funded, you know, more funded than us, and you can get them to come in and subsequently give a value proposition and innovate real quick. You know, we're very, you know, let's call it light regulation. You know, I've been a Monzo user since the very start. You know, here it almost seems that, you know, we're just too, we protect our banks too much. We protect, you know, and what is the framework trying to serve? Is it trying to serve innovation, or is it trying, is the mandate here to push our banks to go digital, which is a very different sort of you know, viewpoint and sort of thing. Do I encourage? Yeah, a very different approach. You know, am I getting more companies come in and innovate, or am I getting sort of just the incumbents to just push to become digital? And it sort of seems the latter at the moment. Or alternatively, extremely well-funded companies, you know, the Grabs of this world, etc.
But I mean, just adding on a little bit to that, how can we, well, either as consumers or as companies, sort of change that trend, or like, I don't know, help influence that mandate to sort of show that, okay, this is the way to go and this is where, you know, we want to go?
I'm going to set up a petition after this call. No, I mean, I think it's definitely an institutional thing. So yeah, you know, and I think it's just the way in which we're somewhat built here, and in particular how the you know, Bank Negara and sort of government, in fact, is built around here. You know, we're quite risk averse in relative terms. You know, so it does require just a mindset shift. You know, how do we position ourselves? And you know, when you compare ourselves to the rest of Southeast Asia, you know, we have a more mature financial market for sure, and a more mature economy. There's going to be a time when you've sort of got Vietnam coming up, Indonesia, obviously, you know, who are going to overtake us. You know, they're way more aggressive. You know, if we sort of don't encourage and sort of take a little bit more risk, then we're just going to die. You know, I not die, but you know, just we're going to fall back a bit. And I think, you know, I mean, again, I go back to the MCO experience. You know, when you're having to submit a bunch of papers into a bank, you're having to submit a bunch of papers to the bank. You know, and sort of you take the payment gateway world, right? You know, a bank, you have to submit X amount of forms, this thick, you know, versus maybe take a Stripe. Hey, I'm willing to sign you up. I've got a merchant acquiring license and we can go real quick. You know, I'll onboard you first and figure it out later. You know, and subsequently, those guys have eaten up all the stuff over this MCO period just because they're slightly less risk averse. You know, obviously doing credit checks in credit assessments, working with different pieces of data, agreed. But you know, we've got to sort of start thinking that way, you know, in order so we don't get left behind.
Agreed. So this is one question from the floor. Is Curlec looking at applying for digital banking license? And would a potential move into that space be a part of the direct debit model or a diversification into new products? Yeah,
I think this is a good question. If I had countless amount of money in the world, then maybe. But you know, I think the reality is, you know, like I said earlier, the framework is very designed for incumbents or extremely big tech companies to come in. You know, Grab, Touch and Go. I mean, Boost is Axiata as well, right? And those sort of the guys will be applying. So whilst, you know, sort of we've seen the consortium model in Singapore, I mean, there've been a ton of digital banking applicants from Singapore. You know, it takes some fintechs there, you know, Funding Society is part of a consortium with people like Xiaomi. To be honest, it's not really on the radar. What we would like to do is work with a digital bank. Like our model is that we partner up with banks, particularly from an integration standpoint. And, you know, if we could work with a digital bank, it would make our lives easier. Whether, you know, that's an incumbent who sets up, you know, easier integration points for us, alternatively, a new digital bank who starts from the ground up. But yeah, you know, the whole digital bank discussion is quite interesting, particularly with this whole MCO COVID-19 situation. On the one hand, I mean, it's clear that we need a digital bank or need more online stroke digital banking. But I think maybe the second point is you know, all these banks are setting aside tons and tons of money, you know, for bad loans, you know, and does a tech company, albeit well-funded, have that capacity to do that, particularly if it's not core business? So I think the jury's still out. You know, obviously COVID-19 has posed sort of a big spanner in the works for it. But you know, it's pretty exciting times nonetheless.
Yeah, really exciting. Okay, so one last question before we get into a little bit more personal questions. Has there been any cybersecurity challenges that Curlec has faced, and how do you guys address it?
Yeah, so again, maybe if I give a little bit more context about the company. Obviously, you know, it's sort of within the banking technology space, heavily regulated, and also, you know, security's got to be at the core of your design. You know, you're dealing with money, so one more. You know, you're dealing with money, so you know, security's got to be of a very high standard. So what I would say about our team is actually, you know, whilst Curlec is a very new entity, the team that sits behind it has been in banking technology for years and years and years. You know, we've been in enterprise software for years and years. You know, PayNet actually use our system, our back-end system, to process paper direct debit mandates. You know, and we've sort of been in this scheme going on since 2010 as an example. So I think that's one thing to note. In terms of security, you know, we deploy all our systems in the cloud. We use Alibaba Cloud here and sort of have our disaster recovery here as well, Alibaba Cloud. In terms of the payment transaction flow, you know, everything's done by a two-factor authentication. That's the way in which PayNet has designed the system. So, you know, I think we're pretty well covered in that space, albeit, you know, security is something that is always at the top of our minds, and obviously improving on that, and, you know, for risks that may or may not come to fruition, is always on our mind.
Is it getting more tricky though? I mean, like, assuming, like, you know, all these cyber hackers and things like that are getting even more advanced because everybody's being digital.
Yeah, for sure. I mean, and that's the thing. You know, we have a dedicated team dealing with this, and we're constantly making product updates to sort of combat new risks moving forward.
All right, that's great. All right, okay, so I think we'll move on to there have been a few personal questions. I think if you're okay with answering it as well.
Sure.
So I think like a lot of the attendees wanted to know, you know, what was the push or like the deciding factor, just to know a little bit of your story. What was the push or deciding factor to leave law, because you're trained in law, and you know, to take that leap and to start your own business?
Yeah. So I think the first thing to know is that, you know, I've always sort of wanted to do something entrepreneurial. Even from a young age, sort of had entrepreneurial parents, but sort of, you know, went down the legal route, decided not to become a lawyer. I think I may have my mom on this call, so sorry, mom, for this. But, you know, sort of Asian parents, not so happy. You know, I think I always wanted that push, and you know, I am fortunate in the sense that, you know, my co-founder, yeah, my brother's on the call. Your mom is on the call. You know, my co-founder is actually a close family friend. He's a lot older than me, and he sort of, you know, pitched this idea to me sort of when it was really in its early stages, which was really, you know, the push I came back to come back. And you know, if I'm being honest, it was very a big leap of faith, very much outside my comfort zone. You know, and I think, you know, it's been a really great experience, just learning day to day. Can't say I know everything, hardly know anything, but you know, so I think it's been quite a ride, at least over the next 2 years, and then looking forward to what's coming next.
Awesome. And okay, one last question I think for today, I think is I think a lot of our attendees also wanted to know, like, you know, where does one begin if they are thinking of starting their own startup or their own business? Like, what was your process flow? Maybe if you could share that, then maybe it could be like a benchmark or a sort of something that people can emulate as well.
Yeah. So I mean, I get asked this question a lot, right? How do you start off? And I think the first point to note is that it's not easy. There is, you know, being an entrepreneur, setting up your own business sort of thing, it's not an easy ride. So I think if you want to go down that route, you've got to be prepared for that. It's not like a corporate job where the path is somewhat laid out for you. The path is somewhat laid out for you, and sort of, if you do work hard, you can sort of climb that. With an entrepreneurial journey, it's way more up down. So I think that's the first thing to note, knowing that you're going to have to be prepared for that. The second thing is obviously having a good support network around you, whether that's sort of your internal team or sort of within your personal life. And I think the last thing, and maybe the most important thing, is just do it. You just got to take that dive at some point. I think too often, I mean, we're still a young company, but I even see sort of people even younger than us who come to us, and they're in a way so paralyzed by business plans, paralyzed by spreadsheets and projections and all that sort of stuff. And I think really, whilst projections and business plans are great and they do serve a purpose, you just got to go do it. You've got to make sure that you're solving a problem as well, as opposed to trying to, you've got a solution looking for a problem. You're actually solving a problem, and you just got to go test it. You've got to go test it. In software development, this is all sort of agile thinking, lean methodology and all that sort of stuff. Go deploy, test, iterate. Go deploy, test, iterate. And I think, as an entrepreneur, you've got to sort of take the same mindset. Go try things, fail, and then try again. Fail and try again. Because, every time you do fail, you do learn something. And I think, you've got to take that mindset. You sort of just got to take that jump if you're going to do it.
I'm just adding on one more. Has there been any time where it was extremely difficult for you and you were thinking of giving up?
I think we've had some difficult moments. I'm not going to lie. I mean, I think, there is I'm going to be candid here. There's something very different between, there is a difference between PR and sort of the ins and outs, the day in, day out of being in a startup. I think the reality of being a startup is that you're constantly tight on cash. You don't have that luxury where you can just go spend on willy-nilly on everything. There have been there has been some times where we have been very short in terms of our runway. I mean, you can see that cliff. I can tell you it's not an enjoyable experience, but it's
stressful, I imagine.
It's stressful, but very much within the team itself, I think we very much take the view is, when the going gets tough, get going. And I think, that's very much the mindset we need to take, particularly as a small company in this particular sector as well. FinTech is, it's financial services, right? So you're dealing with some big companies here. So, whilst, there have been some times where, there's many ups and downs, put it that way.
All right, okay. And just one question as well on like your team, or like the fact that how difficult this journey of a startup is. That how did that affect the team that you choose to work with you, and what sort of things do you look for to be part of your team to help bring this team forward?
Yeah, so obviously culture is a big part of what we do, particularly when you're a small company. We're about 20 people right now. So obviously, if you bring someone in, they're instantly going to have an impact no matter what it is. But I think the mantra we sort of take and sort of we preach to all new hires is that when you do join a company, we want to encourage sort of autonomous thinking, autonomous decision making, etc. We don't want it to be a sort of top-down decision making process all the time. So everything we do is in Curlec's best interest. What is in the best interest of the company, and how do you interpret that? And for some people, they love it. They come in, particularly entrepreneurial mindset, eventually want to start their own companies and stuff like that, and excel. They like that freedom. They like before work from home became a cool thing. You can work from home. We have flexi hours, flexi holidays, etc. So that was one thing. But, for other people who come in for, there's nothing wrong with it, but it's just a different mindset, who prefer that sort of structure that, let's say, a corporate, a bank or a consulting firm, whatever could provide, hasn't been quite the right fit. So I think, firstly, that's important. But secondly, also bringing the right mindset, believing in what it is we're trying to achieve, believing in the vision, honestly, not getting as well compensated as they may do elsewhere, but seeing this into the long term and really trying to be part of something that, we feel at least could potentially change the way in which a lot of Southeast Asian businesses as well as consumers transact.
Agree, I agree. Okay, so, well, we've got still a bit of time. Is there anything that you'd like to add, Zac? Maybe like advice for aspiring entrepreneurs, last words? Or for those who are listening in, if you guys do have any question, please drop it in the Q&A box, and Zac can still have time to like answer your questions. But yeah, in the meantime, any advice for aspiring entrepreneurs?
I mean, I think I touched on it just now, right?
Yep.
I think you just got to go try and do it. I think one thing, when you're going to these sort of things as well, you just got to drop ego. The reality is that you're just going to be constantly grilled and you're going to get way more rejections than you will do yeses. Give you an example. I mean, a lot of startups will say this too, right? We are VC funded by 2 VCs now. But you have no idea how many pitches. I mean, it must be in triple digits. And we've heard all sorts of sort of feedback. One VC even said, "Oh, this business will it'll buy you a nice house in Kedah." Like, excuse me, so you sort of, so you've got to become thick-skinned to all those other things. You've got to be able to deal with the rejections, and you just got to learn from it. And I think you got to be open to scrutiny, and sort of don't be too tied to whatever it is your product is. It's got to be open to iteration. It's got to be open to feedback, and it's got to be open to change. So I think that's a big piece of advice I'd give. Just learn to unlearn to learn.
All right. Well, that's good. Okay, so we do have one question. Okay, 2 questions. Okay. First one, is Curlec looking at the cryptocurrency space, given the option is available in Malaysia now?
It is, and I personally own some Bitcoin, and obviously I've been following the price. I think I'm no expert on crypto or blockchain for that matter, so I really can't pass any sort of insight, which you probably, some of the participants on this call may be better placed than I am, to be honest. Are we looking at the crypto space? It's something we always monitor. Whether or not crypto as it is right now is going to become a full-blown sort of alternative currency like everyone says, my feeling is probably no. Sort of when you deregulate like that, I just don't think central banks around the world will accept it. And you're already sort of seeing that. You take Libra as an example, Facebook's sort of crypto, and that was a stable coin, so not sort of like a Bitcoin type thing. But anyways, in that case, you've seen the huge pushback from central banks around the world. And in fact, a lot of the companies that were originally part of it have pulled out. Do I believe in digital currencies, which maybe sit on blockchain? I think it's far more realistic to look out for that. Whether Malaysia or not, or Southeast Asian countries for that matter, will go in that direction is to be seen. What I would say about it is that there are countries around the world implementing it. Estonia is one good example. Yep. They've got a fully digital currency. But China now, the Central Bank of China now pushing out sort of trials of this. So very interesting and sort of monitoring it, but obviously sort of not crypto in its original deregulated form.
Good stuff, interesting stuff. Okay, next question from the floor. Just curious, how did Forbes filter 30 under 30 globally? Oh, maybe you can speak a little bit about your Forbes 30 under 30, since that was a relatively recent thing.
Luck. Luck.
Was there any sort of like application? How did they?
There is a nomination process, and once you get nominated, they ask you a bunch of sort of due diligence questions after, sort of asking about the business model, et cetera, your personal questions. And to be perfectly honest, they had told me when it had happened that it was going to happen sometime in March, but I always said, oh, COVID-19, like everything's sort of been pushed back, et cetera. and never heard from them. And sort of it came out I can't remember, early April, I think. Anyways, it was a surprise, but I think but I have to answer your question, luck.
You lose Zac? Oh, okay. You're back.
Can you hear me?
You're back. Yeah, yes. All right, and yes.
Hello?
Can you hear me? Hello? Can you hear me?
I can't hear you. I think there's really big lag though.
Okay. Are we on the same time?
I don't know.
Okay. So were you finished with the Forbes 30 under 30 question?
Yeah, no. The short answer is luck.
Short answer is luck. Okay.
Yeah.
Okay, I think we have time for one last question. This is interesting. Okay, so WhatsApp Pay is being rolled out in India as a test ground. Do you see that as a huge challenge to fintech players if it's rolled out in Malaysia, given the scale of its user base, as people using WhatsApp?
Yeah. So I mean, the focus on WhatsApp in India. I mean, Facebook has put a lot of money into it recently, into India recently. I think, for them to monetize WhatsApp is, that's the next step forward. I think it depends, right? And it really, obviously Malaysia's got a really big WhatsApp user base as well. And so does India. I think WhatsApp Pay would be a huge threat if it came to Malaysia, particularly for the e-wallet here. I personally think the jury is out on e-wallets in this country. That may or may not be controversial, I don't know. I think, the dynamics of China versus Malaysia and Southeast Asia for that matter is different. Our banking system actually, we use way more card-based payments here as an example. China was purely cash. And this whole idea of an e-wallet has really just stemmed from China, and it's people trying to replicate it from China. A very cash-based heavy country and then trying to implement it here. And I think my particular thing with the e-wallets here is that actually when you look at it from a stickiness perspective, how are Grab acquiring, merchants as well as consumers? How is Boost acquiring merchants as well as consumers? How is Touch and Go acquiring, merchants and consumers at the moment? And generally speaking, that's by throwing cash at them. From a merchant perspective, I'm giving away my service for free. But from a consumer's perspective, it's I'm giving you cash back. I'm just giving you loads and tons and cash back. And, firstly, that's unsustainable. And secondly, there's just no stickiness to it. Grab was 20x at one point. And then immediately when it wasn't 20x, I think people stopped using it considerably. So I think there's that stickiness element to it. Why do I use this? And I think what WeChat is really great in China is that it's a social platform. It's where it's your Instagrams, your WhatsApp, it's all rolled into one. And I think, if WhatsApp were to ever come into here, particularly for the e-wallet space, particularly for P2P payments or point of sale payments, etc., would be a huge threat, because I think, when you talk about stickiness factor versus sort of a ride-hailing app or a sort of toll app, if you're talking about your social app, then I think it is a huge threat if Facebook ever decides to go that way, because I spend more time on WhatsApp than anything else.
Yeah, that's true. All right. So it's 4 p.m. I think that's all the time we have. We've got a few more questions, but I'm afraid we're running out of time. Again, Zac, thank you so much for joining us today. Thank you so much for spending your time. To everybody listening in, thank you so much for spending your Saturday afternoon, no less, joining us in this very interesting discussion. I hope everyone has managed to gain something, new insight or new information. We do know that the Facebook Live link wasn't working. We are very sorry for that. We apologize for that. What's going to happen though is that we will be sharing the recording of this. So for those who joined in late from Facebook, you'll be able to sort of see and catch up from the beginning of this discussion. All right, if there's anything else that you want to add, Zac? Last words?
No, thanks guys, obviously, for joining in and listening to me ramble on a Saturday afternoon. I'm sure there's better things you guys could have been doing, but thank you. And obviously, it is a crazy period right now. So, do hope everyone keeps healthy, everyone keeps safe, and particularly, obviously it's job market or sort of business market at the moment is tough. So sort of just we'll get through it, but just, keep safe and stay strong.
Thank you for your insight, Zac. Thank you for sharing all your knowledge and your opinions on things. It certainly was an interesting discussion. And again, thank you everyone for joining us. This marks the end of our session for today, the 77th CEO series. Stay tuned for our next series, the 78th one. We will be posting that up on all our social medias on Young Corporate Malaysians. So follow us if you haven't followed us. And yeah, that's about it. Thank you so much, everyone.
Thanks, guys. Bye.
Thank you. Bye-bye.